If you're looking to create, grow, and sustain your wealth, download and subscribe to the Pain Points of Wealth podcast at BeBullish.com with Bob, Ryan, and Chris Payne. It's your podcast for market insights, money tips, and real talk on the economy. Download and subscribe at BeBullish.com.
Welcome to Sephora.
I'm looking for a perfume that's not too perfumey.
I got you.
Serum moisturizer or moisturizer serum.
Let's get into layering.
My concealer is making me look worse?
Sounds like the wrong shade. Let's get you matched.
There's only one store that really gets what you're going for. Get beauty from people who get beauty. Only at Sephora.
Hi,
Let's get you a basket.
Good morning. This is Mike Stoller for the Stoller Real Estate Report. Is there money for real estate in these days? I don't know the answer, so today I brought a friend, a leading lender in the community, Joe Fingerman, who is the president of the Commercial Real Estate Division and a executive vice president at PPAC Private. What is PPAC Private?
First off, thank you, Michael, for having me. It's really an honor to be with you. PPAC Private is the offshoot of PPAC Gladstone, which was a 100-year-old plus bank that was was started and still is ran from PPAC Gladstone, New Jersey, two towns that are near each other. It's been around for 100 plus years. In the last 2 years, we've made a big push into New York City with the closures of many of the other banks, and with Signature gone, First Republic gone, and other banks.
Basically, New York Community Bank gone.
Other banks exiting the marketplace for
Right.
various reasons. We looked at it as an opportunity, our CEO and board, to come into New York. We've opened a flagship branch at 300 Park Avenue. We've brought on about 20 different banking teams that were either at Signature Bank or First Republic, and really trying to recreate the void that was missing in the marketplace.
But aren't there other competition, like Customers Bank and some of these other
Listen,
banks?
competition is good. There are other banks in the marketplace. They've also hired some people. I always like when there are numerous people bidding on a deal. It's a lot easier than there's only one bank.
So here's the question. How did you get into New York City? Why New York City?
So New York,
You could have gone to parts of Long Island, parts of New Jersey.
PPAC already has 15 plus branches in New Jersey spread throughout the state. And we've actually began an entrance into Long Island in the last couple of months that will become more public as we go forward. Listen, New York City was on PPAC's radar. Our CEO, Doug Kennedy, who I had worked with at North Fork Bank and Capital One, liked the New York City marketplace a lot, but really didn't feel he was capable at that point of competing with the First Republics and Signatures and with that high touch of service. When those banks went out, he tells the story that, within a few weeks he was in the city, and a lot of banks talk about coming into the marketplace. We've already opened a branch. We're about to open another branch in Garden City on Long Island. We've opened a branch in Manhattan at 300 Park. We're opening a Lakewood branch. So we've really went at it full steam.
How big was the portfolio before you came?
The portfolio today on the the bank is $7.5 billion. The commercial real estate is $2.5 billion. And we are working to bring in our legacy relationships from my Signature days, from my former employer, to PPAC and grow the portfolio accordingly.
Tell me about your real estate portfolio today.
The portfolio consists pretty much 50% of multifamily loans. Of those multifamily loans, about half are regulated units throughout the city. The rest are in areas outside of the 5 boroughs. It could be New Jersey, Long Island, etc. The remaining half of the portfolio is commercial real estate, which could be retail. It can be some office in the suburbs, some mixed-use properties, all sorts of different industrial, hospitality, hotels, etc.
So are you lending on multifamily today?
We are lending on multifamily for the right sponsors in the New York metro area, both inside the city and outside.
And what's your appetite? What's the smallest size and the largest size?
Generally, starting off the bat, we look at loan amounts from $3 million to around $10 to $15 million. But for the right client, we can go higher and we can go lower.
Okay, what about lines of credit? Are you providing lines of credit for certain?
We are providing real estate investors for the right clients. Again, if they're willing to have their main deposit relationship with us, we are looking to replace some of the lines of credits they've had at other institutions.
How are you interested in retail? I mean, retail is doing
Retail has
very
done
well.
very well throughout the city. We like both single tenant and multi-tenant, both throughout our entire lending footprint, which is New York, New Jersey, and Southern Connecticut. We've lent on a few shopping centers. We've lent on some single-tenant retail. Again, a lot of it comes down to who the right sponsor is.
Okay, with regard to office, there's A, B, and C properties.
So, based on our size, a lot of the banks, similar to Signature, even at a much bigger scale, could not really do the A or the A-plus buildings. Those go out to, much larger CMBS-type
Sure.
shops. We're right now staying away from B and C office buildings in Manhattan, but we are closing on loans in both suburban Long Island and New Jersey for the right sponsors in office buildings.
And what type of tenants?
Type of tenants could be medical, regular office, law firms, general, typical office tenants.
What about the industrial market?
Again, we like the industrial market. Everyone wants their package immediately. So, we've done those type of facilities both in New Jersey and then what is available in Brooklyn and then on Long Island.
What about construction?
We aren't doing any construction. We're only doing income-producing properties at this point.
When do you think you might go into the construction?
The construction market gets very competitive. Certain banks dominate that space. It's hard to, build it at scale. At Signature, we never did it. At North Fork and Capital One, we did. I'm just not sure when we enter that or if we do.
What's your thought about office conversion into residential?
I think it's a lot easier to put it on an Excel spreadsheet than it's actually done to actually get it done. I think you have to figure out the floor plans, which are exceptionally tough. You have staggering lease expirations, which make it more difficult. And a lot of times when I see summaries of these deals, they forget the fact that there is existing debt on the building, which they have to figure out what to do. That said, I like the idea of taking some of these B and C office buildings and moving them to residential, and certainly that will help the remaining B and C buildings.
What about co-working? The WeWorks, the industrial.
Listen, I think co-working, I've watched companies similar to PPAC, like we expand, we hire, 10 people overnight and we need a place to go, and co-working provides that. I think, co-working today is a lot different than it was, 5-10 years ago with WeWork. I think you see a lot of corporate tenants taking that space for the exact reasons I just said.
What about the mayoral and its effect on the commercial real estate?
Listen, I think there's a lot of unknowns. The front runner right now, as we're recording this, is mentioning freezing rents. A lot of city-owned grocery stores, and a lot of it I don't know that he actually controls. Free bus fares, et cetera. So I don't know. We're preparing for it. I think it's, somewhat of a foregone conclusion that he is going to win it as of this taping.
So how are you preparing for it?
We're looking at our loan to values. We're coming, down further. We're looking for recourse when we need it. We are trying to exit certain, rent regulated buildings and just trying to manage to it. That said, if he was able to freeze the rents, we did see, rents frozen through the de Blasio administration. We went through COVID, and the real estate community has long been, every year it's going to die, and it just keeps coming back.
How could landlords do well in a time where basically they're stagnated on the values of the building, coupled with the fact that they can't get increases for insurance or for construction to renovate these properties so people could live in them?
Listen,
it's nice to talk about rent control. Rent stabilization is important.
Listen, I think it's a tremendous issue. I think Albany's aware that the 2019 rent laws went too far. I think they have to figure out how to reverse it, even if there's just a simple reset of the first rent, that you're able to bring them somewhat to market. But, the landlords have been hit with, whammy after whammy, whether it's, the 2019 rent laws, inflation on the expenses, COVID, where you were told not to pay the rent, high interest rate environment, more laws coming out each day, whether it's energy or scaffolding. Also, the high interest rates have also, hurt the buildings. So we're trying to work with each borrower. If a borrower is willing to work with us, we're willing to work with them. I think most banks are, and just try to get through these times. We look at our portfolio pretty regularly. The majority of our buildings have been owned for over 10 years by this existing sponsorship. Most of them are families or smaller families. I don't think they're giving up just so quickly. Which borough do you like the most today? I mean, Brooklyn is the hottest for residential. I think, both free market and, the smaller buildings, the under 10 unit buildings is very hot. Obviously Manhattan is the epicenter of it all. We, continue to see high tourism, retail, can't get a reservation at lunch, so it's a strong market.
Okay. Hospitality.
We've lent on hotels historically, not in the 5 boroughs, but more in northern New Jersey. It's it's a very cyclical business. It's not something I'm looking to expand.
It's an operating business.
It's an operating business that, every day your tenant checks out. So you've got to be careful with it. It's not something I look to grow.
Do you see any other new competitors coming into the market besides like you guys?
Listen, I think there's always competitors. I always joke that there's this plane that arrives some mornings at JFK with different banks that say we want to be in New York, and then they fly out on Wednesday, but we're here to stay. So we're looking for the right relationships, the right people, and I think competition is good.
And I think you are major competition because you built a great business at Signature, Norfolk, and Capital One, and I'd like to thank you for being here today.
Thank you.
If you're looking to create, grow, and sustain your wealth, download and subscribe to the Pain Points of Wealth podcast at BeBullish.com with Bob, Ryan, and Chris Payne. It's your podcast for market insights, money tips, and real talk on the economy. Download and subscribe at BeBullish.com.